Good morning, everyone. I'm Nadine, and I'm here to give you today's trading notes. For the U.S. markets, Dow and S&P tumbled after New York City Mayor Bill de Blasio stated that the city could experience a full lockdown soon. The warning came as the U.S. began to roll out Pfizer and BioNTech's COVID-19 vaccine to distribution centers across the country. Meanwhile, London will be under England's toughest restriction after it identifies new coronavirus variant linked with a faster spread of cases. In our local markets, the PSEI looks to test new highs this week with next resistances at 7,200 and 7,400. Note that our 2021 base target is at 7,600, translating into a 2021 estimated per earnings ratio of 20 times, with a 38% growth in earnings per share. The market may seem pricey at this point, while we think there are still a handful of issues trading below their historical averages. Among the companies that are still worth taking a position in are the following: AGI, MEG, MPI, MBT, GTCap, LTG, SECB, DMC, among a few which have more potential to yield higher than the index. Meanwhile, the House approves extending the validity of the 2020 budget. Our view: the bill aims to continue the financing of infrastructure projects under the current fiscal year that have been subjected for procurement to spur the recovery of the Philippine economy in 2021. In addition, President Duterte certified the approval of the bill as urgent, along with the bill extending the validity of Bayanihan 2, which is expiring on December 19. Government spending continued to lag in the third quarter, which resulted into a weaker than expected GDP figure. In other news, the government is hopeful to hit infrastructure spending target this year. Our view: the national government is optimistic that the infrastructure spending target will be met this year as it gradually accelerates. Infrastructure spending is likely to achieve 824.9 billion pesos or 4.5% of GDP versus the 4.3% GDP forecast in July. This will be boosted by spending from the DPWH in the last 2 months of 2020. Year-to-date infrastructure spending is down 18% from the same period last year to 508.5 billion, with October alone declining 31%. The recent figure does not include yet disbursements made by the LGUs and subsidy to state-owned firms, which are also reportedly substantial. The infrastructure spend goal is at 825 billion, 17% lower than the pre-pandemic target of 989 billion. That wraps up today's market outlook. Join us again tomorrow for your daily trading notes. Stay safe!